In the early 1990s, while studying at Columbia Business School, value investor Li Lu invested some of his student loan money in deeply undervalued Russian oil stocks. It's a part of the world where there is huge political instability, and sadly we've seen quite a bit of that in 2022, but it is a real lesson in investing with a huge margin of safety. Towards the end of the period in which Li Lu owned these Russian investments, the Asian financial crisis happened, and Russia actually devalued its currency by 90%. But even though Li Lu effectively lost 90% just on the currency in this investment, he still made a 10x return overall, just because of how cheaply he was able to acquire these companies. This is the second video in a three-part series here on the channel looking at some of Li Lu's best investments. So if you do enjoy the video, be sure to subscribe. And the channel is actually getting very close to 40,000 subscribers. And I'm hugely appreciative of all the support that I've gotten on this YouTube channel over the years. And as a result, I want to just do a small giveaway. I was actually really surprised and quite lucky a week or two ago to actually have some mail from Guy Spear, and he actually sent me a copy of his book, The Education of a Value Investor. I actually already have a copy of this book, so I actually want to give away my original copy of this book that I've now read a couple of times to a subscriber to say thank you for potentially hitting that 40,000 subscriber milestone here soon. So if you're interested in going in the draw to win a copy of this completely free, just comment the word aquamarine down in the comment section below. Of course, aquamarine capital being Guy Spear's fund. And if you are interested in winning a copy of that book, just be sure to check out the next video I upload here on the channel as well, where I will announce a randomly selected winner from the comments. So what was the investment case with this obscure Russian oil stock that Li Lu invested in the 1990s? Well, he actually shared quite a bit of detail on this investment in a speech that he gave in 2012 at San Francisco State University. And the story basically goes that in 1993, Russia went through the pretty sudden process of privatizing a lot of really valuable Russian assets, and included in the basket of assets that were privatized were a couple of major oil and gas giants, namely Lukoil and Gazprom. Stock certificates in these companies were literally handed out to ordinary citizens and to employees at some of these companies, and the process all sort of happened so quickly that in many cases a lot of the people receiving these stock certificates really didn't truly appreciate the value of what they'd just been given. There wasn't really like a super functional stock market or stock exchange as we would be really familiar with in most developed markets today. And these people were literally, getting physical paper stock certificates and, again, not really appreciating the true value of what they represented when someone simply just turned up and offered them cash, which they did definitely recognize for their stock certificates. They were pretty much willing to just give them away for almost any price. And when Li Lu sort of looked at this situation and went through some of the basic numbers and looked at how extreme the low pricing kind of got relative to the net asset value of oil reserves for these companies, he had a couple of things to say. He said it was ridiculous, and now I thought at that point that's some kind of margin of safety, even considering the political situation in Russia. So just how extreme did this pricing get? Well, at the time, the sort of 5-year rolling average price for oil was about $20 per barrel. And if we completely forget the earnings that these companies were throwing off and we simply look at the net asset value of the proven oil reserves of these companies and applied a $20 per barrel price to the barrels of oil that these companies had in the ground, we could start to kind of estimate what these companies are likely worth. So for example, if a company had 1 million barrels of proven oil reserves and the price per barrel at the time is $20, that would mean they have a net asset value of $20 million. That's kind of the process that Li Lu was going through here. And Li Lu was pretty amazed to find that even though the price of oil was about $20 per barrel, the market price at which these stocks were trading implied a price per barrel of oil of somewhere between 10 and 20 cents per barrel. In other words, these stocks were trading at anywhere from a 99% to 99.5% discount to their net asset value. He was buying $1 of oil value for somewhere between half a cent and 1 cent on the dollar. Now, of course, Li Lu is only one of many super investors that I like to follow. The most notable one, of course, being Warren Buffett at Berkshire Hathaway. So if you're interested in seeing a curated list put together by me of the main stocks that Warren Buffett has been buying in 2022, check out the first link in the description below, which will take you over to Simply Wall Street. It will give you some stats on the companies that Buffett has been purchasing, as well as some commentary from me on why I think he might be interested in those companies. If you're also interested in using the Simply Wall Street platform for your stock analysis, that link will get the first 100 people to use it a 40% discount on the unlimited plan. Now, this investment for Li Lu actually reminds me of two other investment stories that I've covered here on the channel before. One is Charlie Munger's investment in Belridge Oil that was in the three-part best investment series that I actually did on Charlie Munger not too long ago. And in that situation, in 1977, Munger was buying Belridge Oil for very similar reasons, basically because they had, oil reserves that were being significantly undervalued by the market. And in that case, the pricing was pretty extreme. He was getting about a 95% discount to net asset value. In this case, Li Lu was getting like more than a 99% discount, so even more extreme. Belridge Oil later went on to be a 30x return for Charlie Munger after the business was bought out by much larger oil companies. The other investment that this story kind of reminds me of was an investment that a young Warren Buffett made in, I believe, the 1950s in a company called National American, which was essentially a very quantitatively cheap business that Warren Buffett stumbled on. It was a very closely held stock owned for a long period of time by a lot of local farmers, actually. And the overlap in stories here is that, like the Russian oil situation, many of these farmers didn't have a true appreciation for what their stock certificates were really worth. In the case of National American, the share price was about $30 and it was a pretty thinly traded, again, inefficient market, lots of paper stock certificate kind of trading happening here. But the company was earning a pretty stable about $29 in earnings per share. So it was effectively a PE of 1. Again, when Buffett and his colleagues at the time turned up with real cash, to these farmers' houses and offered to buy their stock from them, and they didn't truly know the value, or they had maybe paid $100 per share back in the day and it had just steadily gone down forever in their eyes, they were more than happy to, hand over the stock certificates. Now, I want to play a couple of clips here from this 2012 talk that Li Lu gave, where he basically explains what ended up happening with the Russian oil stocks. Now, I apologize in advance if the video and audio quality isn't particularly good in these clips. It's not the greatest recording on YouTube of this talk, but I still think it's interesting to play for you here what Li Lu had to say. Firstly, around what the price of these companies did initially. Keeping in mind here that it was trading at about 10 to 20 cents per barrel of oil when the market price at the time was more like $20 per barrel of oil.
And it ultimately traded up, for a longer period of time. It was at 20, 30 cents, 50 cents, and gradually moved to $1 and briefly traded to $3.
Now let's check out another clip from that talk with Li Lu, this time talking about the massive currency devaluation and the eventual return that a lot of early investors in this situation still were able to capture.
And then a few years later, the Asian financial crisis occurred and the Russian devalued the currency. So all of a sudden, the $2 oil no longer looks very protected because the currency literally at one point it went down 90%. 90. But if you really bought it at the 10 cents, which is a half percent of the value, less than, not the 10%, the value, the currency down 90%, you still came out quite all right. In fact, you still probably made it 10 times your money. That's how an extreme situation can become. That would be a good example to study.
So there you have it from Li Lu. Even after the massive currency devaluation of like 90% during the Asian financial crisis, early investors in this situation were able to probably about 10x their money. And just to give you a little more detail on that, it looks like privatization happened in around 1993. And like I say, it was a very inefficient market. It wasn't like today where we could just log into our online brokerage accounts and see a bunch of info about, price to earning multiples and price to book and recent, trading volume and stock prices and so on. It was much, much less efficient. But it looks like about 5 years later in 1998, the stock was actually listed on the over-the-counter markets, and it became a little more liquid, or probably quite significantly more liquid when that happened. And as Li Lu explained, early investors were able to do very well, capturing probably about a 10x gain even after the currency devaluation. Clearly could have been very, very substantially more if that devaluation hadn't happened. So that is the story of Li Lu's investment in some of these very, very, very undervalued Russian oil stocks. To me, it's a somewhat sketchy situation. I would say I don't see myself investing in something like this unless maybe the valuation did get this extreme. I really don't know. But it is a great lesson in margin of safety. Even when we have huge events come out of left field, like a 90% currency devaluation in this case, Li Lu was able to capture such an extreme discount to the value of those net assets that he still made a really phenomenal return. So that's all I've got for this one. Like I said towards the start of the video, if you want to go in the draw to get one of my copies of The Education of a Value Investor by Guy Spear, which is a phenomenal book. Like I say, read it a couple times now, and I should read it again at some point here because it is one of my favorite investing books. But if you do want to get in the draw for that, just leave a comment down in the comment section below that includes the word aquamarine, and please subscribe if you haven't already and help us nudge up over that 40,000 subscriber threshold. But that's it from me for this one, and I'll see you in the next video. Cheers.